Now, Syrah.
Syrah.
How many times on the call this morning did we hear the word unsustainable? Geez, it didn't read too well, did it, Trav?
Mate, it was a shocker. We just had a phone call.
Can I sum up what I feel that conversation was? Because I
I'd love you
thought it was going to be recorded, but it was like having the best route of your life, but not getting off at the end.
You can go whenever you want.
I can go whenever I want, okay? G'day, money miners. Welcome back. It is Tuesday, July 18th, 2023. We've got JD in the house. We've got Trav Ricciardo, and Matt is off wheeling and dealing. Boys, what have you got for us today?
Who are you?
I won the raffle, so I get to do the intro.
We have a fill-in host, hey?
Well, at the moment, Money of Mine is sending out, you can buy a raffle ticket, and if you win, you're on the show. You do the intro.
So this lucky customer picked up a raffle ticket for $500 and she won the right to do the intro.
And it's the best $500 I've ever spent.
Well done, mate.
This is our monetization strategy. I like it.
That's all I've got for money and mining. I will see you all later.
Hang on. Who are you? You got to introduce yourself, Fred.
I work here in the incubator at the...
It's Money of Mine HQ.
Yeah, at Money of Mine HQ. I do my work from here some days. I hang around, I drink your coffee. And sometimes I talk about mining. Sometimes.
Okay. Well...
Is that all we need from me?
You're supposed to give a bit of a sneak peek on what's to come in the show.
What's to come in the show?
Yeah, also, I mean, if you're going to fill in for Maddie, there needs to be a few knee
I've got
slappers
nothing to
as
tell
well.
you.
Because
I have no idea what you're going to talk about today. JD works behind me, he tip-taps away in his keyboard, and I don't really understand any of it.
Well, I can fill in the money miners. We got a bit of Lithium.
we do.
Syrah.
Is it Syrah or Syrah?
Syrah?
It's one or the other.
We'll find out soon enough. Thanks, co-host. And we've got Allkem.
Okay. All right. Beautiful, mate. We got a few stories to talk through today. We're at the start of quarterly reporting season, so there's some early birds hitting the announcements with the quarterlies, JD. But other than that, we've got a few lithium stories to talk to, and Syrah, the graphite underperformance. That's the big one today.
Where should we start, mate?
I think we kick it off with Lithium.
Okay, so we don't have too much to work from here, do we? Trading halt, but pending a further announcement as it sort of relates to their dealings with the government of Mali regarding the plans to produce DSO, which is meant to be happening pretty soon, isn't it?
Yeah, and so that's the wording in the trading halt announcement. They've received some correspondence from the government of Mali, so we're kind of watching to see what this manifests into. I think shout out to Mondi on Twitter who pointed it out to me that actually the former Malian mines minister was a guy called Lamine Seydou Traoré, and he was actually forced to tender his resignation there on the 31st of May. There were a bunch of power cuts across Mali, which fell into his sort of wheelhouse, and he might have been the scapegoat for some of that backlash. But he was also then found to have tens of thousands of euros in cash at an airport in Paris. However, why does this matter? The new mines minister in Mali has just started the job there, and so maybe there's a bit of a difference in opinion given the previous one pledged his support for the project in December.
Yeah, it's not that uncommon that you see a sort of change in regime, a change in rule in some of these countries, and you start seeing terms renegotiated, and we'll touch a bit on that more later because there was some news coming out of Mali, some sort of rumblings that local and state interests might want to up their interests. But just regarding the DSO plans, we touched on how imminent that was at Goulamina. So they've actually started mining there already. The company flagged late last month that crushing and all the equipment was performing well. Things were, up and running. They were pretty imminent to announcing the appointment of a trucking contractor to truck from Goulamina the 1,000-odd kilometres to the port.
And that's the big uncertainty with this project is the trucking logistics, right? When people have question marks over Leo.
Yeah. It's something we'd flagged before. They have posted some pretty good, footage. They've tried to assure the market that it's all covered. They've got 3 possible routes, but they're looking at that one heading south. They're still looking, as of late last month, to confirm the the Port Authority that they have the rights to send out the spodumene ore. But it all looked like it was coming together quite quickly, and they were planning to get first revenue in Q4 of this calendar year. So going back to that mining code news had sort of surfaced from, I think Reuters first reported that Malian authorities were looking to up the stakes that they have. So currently Malian state interests sit at about 10%. They have the right to get another 10%, but they want that to sort of, it's all pretty opaque at the moment, but they want that to potentially start at a 15% clip of mining projects in the country and could result into 20 to 35% stakes in these projects. So it's kind of par for the course in West Africa, but we'll see how that sort of plays out there.
Boys, sorry I'm bloody late. This is like
Coming in hot.
A mid-show entrance.
Coming in hot.
What do we call it? Business development.
Wheeling and dealing.
Business development.
Love it.
Jeez,
So
we might have a sponsor.
Oi, love it.
Yeah,
so we've just
what's going on?
We've just wrapped up Lithium, mate. So trading halt pending further announcement. We'll have to sort of see. I'm quite keen.
What was the what's it pending? Did they give much
mate,
colour
you're going to have to
on it?
re-listen to the bloody show. We're not going to repeat it for the money minds.
Come on, help it out. What was it?
Just
Capital raise
just
fees?
a trading halt pending a announcement that in negotiation with the government of Mali relating to their direct shipping ore, so their DSO. So we'll sort of have to see how that plays out. Just a trading hold at the moment. Now, Syrah.
Syrah. I'm very interested in this one, mate. The graphite producer, Syrah.
So we both listened
Good
to
graphite team at the moment, JD. You covered it a bit yesterday.
Yeah, coming from a low base with my graphite knowledge, but we both listened to the quarterly call this morning. We both read the quarterly, and geez, it didn't read too well, did it, Trav?
Mate, it was a shocker. Like, there's no other way
to put it lightly.
It was stocks down 12% intraday already. It's pretty horrific one. The thing that just stood out to me more than anything else is that quote that they'd reached maximum inventory and hence halted production for the last 2 months of the quarter, and they only produced at 50% for the first month of the quarter. Yeah,
it doesn't stack up. So you're 3 months in the quarter, obviously. The first month they're producing at 50% capacity, and then you switch the thing off for the next two, and you're at max inventory level. It doesn't read too well. So they make it somewhat hard in the first couple pages to see how the actual financial performance played out. You can see C1 costs, those direct mining costs of $565 a ton. Sales price was $688 a ton. But if you actually flick into the actual quarterly, the financials, operating cash flow negative US $29.5 million
for the quarter. Wow.
For the quarter, and I mean just look at the actual receipts from the customers, right?
Mate, that's staggering, right? Only 9.6 million receipts from customers versus 40 million in production and staff costs. So that explains why you have that negative operating cash flow, but it's all about, no one's buying the product. Well, China's not buying the product.
Exactly. And then on the investing cash flow, which is, very real, this CapEx expenses have to go on the ground. They're building up the Vida Lea expansion at the moment, which is going to cost them $190 million US. So investing cash flows were negative $30.7 million US dollars for the quarter. And yeah, like I said, that expansion, 190 all up, that's now up 8% since they made the final investment decision there, and 127 million US of the 190 has been spent already. So it's not looking too good. At the end of the quarter, they had 109 US in cash, and that includes 55 million US, which is sort of associated with a loan from the Department of Energy, the US Department of Energy, that is.
It's been you look at the 10-year chart for Syrah, it looks like the French Alps. It's she's been a rocky ride. They've had a bit of a comeback in the last 3 years, but it has been all just blown out. At the start of this year, they're well under halved. So it looks like a lot of downward pressure on them at the moment.
Yeah, they've had a tough year of late. Let's talk about the market conditions, because as we've touched on in the past, graphite's pretty opaque, and you've obviously got the synthetic stuff and you've got the natural rather. Syrah obviously being in the business of natural, and a lot of the synthetic stuff sort of coming out of China. And there were a lot of interesting quotes in the quarterly report as well as on the call this morning.
This is the
what
thing
sort of
that
stood
I
out
was,
to you, Trav?
Yeah, well, this is the bit that I was really interesting to, because we talked about the de minimis receipts from customers there. So something's going wrong with the market. Big inventory not producing. So the market is what's driving performance here. So that's what I was really curious about. The things that super stood out to me was the narrative that was being paved by Syrah's management team, and that narrative was ultimately that Chinese companies in China, they're engaging in loss-making activities on the production of the synthetic graphite. My read-through was potentially to suppress prices intentionally, and that's put significant pricing pressure in the downstream anode market. They've seen the entry of new artificial capacity at lower prices. They reference lower coke, lower power prices, and that moved costs lower for those synthetic players in China. That competition has led to higher volumes, and this is the interesting bit, at or below the cost of production.
Yeah, I'd completely echo what you said there. How many times on the call this morning did we hear the word unsustainable? And it wasn't just in reference to what these prices are doing to their own business, but they were, implying, if not outwardly saying, that the prices are unsustainable for even the Chinese producers as well.
It's the first time in history, according to Syrah's management, that the artificial graphite prices have converged to natural prices. So
yeah, wow. So the artificial to natural, does it function exactly the same? There's just the ESG component of it. What's the go?
No, there are differences. I'm not a graphite market expert, full disclaimer. I think one thing that's worth considering though is with the synthetic graphite, you actually end up with less variability in your final product. All that sort of stuff matters, right? So
the synthetic is more reliable.
Well, yeah,
can be more reliable.
Can be. You might even be able to blend it for optimal kind of outcomes. But yeah, there's a whole suite of parameters that go into what makes good flake.
Maddie, this quote might stand out to you from the quarterly today. It was buried in, the 8th page or something. The intensive competition amongst new and incumbent synthetic graphite AAM, so active anode material producers, has driven the utilisation of higher sulfate input materials and shortened the graphitization processing cycle times, leading to concerns from the battery manufacturers over the product quality and questions regarding the sustainability of current prices. So they're sort of implying that, the quicker the process and everything that's being done does actually lead to a lower quality product.
Yeah, right. So it's sort of similar, but essentially inverted in a way to nickel. There's these two different pricing streams. There's class 1 and class 2 nickel, but the graphite is actually the other way. The synthetic appears to be more reliable.
I think they're substitutable. So that's the difference between class 1, class 2 nickel. You can't substitute one for the other. In this case, you can literally substitute synthetic for natural. So
yeah.
There are a few other things that stood out, sort of in particular relating to what the company refers to as Chinese market behaviour. Obviously, a lot of this comes from Chinese producers. So Syrah stated that the Chinese anode production was up 9% quarter on quarter and up 25% year on year. That's pretty substantial for a commodities supply to be up 25%. And, in quotes, with significant additional synthetic graphite AAM production. The company then also went on to state that you can have short-term demand and supply imbalances as a result of chunky orders from, battery makers, automakers, as well as competing supply. And then Syrah went on to sort of point the finger at minimal visibility that they have from AAM inventory levels in China, which leads to sort of sudden and unanticipated impacts in the pricing of the product, which ultimately led to them putting a production on pause at Balama. There was one other thing they went on to say. Aggressive pricing saw synthetic graphite AAM volumes increase in late 22 and into 2023 as the new entrants sought market share to allow production continuity to demonstrate the quality product to the battery manufacturers and operating reliability. So just sort of really trying to muscle their way into the market, even if that's loss-making for a while, and win market share at the cost of some of their competitors.
JD, I'm curious to get your perspective on the parallels between this stock and Jevois in a lot of ways. They both seem to me like companies where they produce a commodity that has an opacally traded market where China has outsized influence on the pricing.
Absolutely.
Pricing that market. Both have been hit pretty hard amid weaker commodity price dynamics and demand, and both have had high inventory, pretty horrific sort of shareholder, pretty horrific share price impact to their share prices as a result of that. And I think both of them kind of fit the theme of having some sort of exciting element about the fact that they might be able to be a strategically important asset to the West, given the concentration of the market in China. But right now, they're really just suffering from the tumultuous cash flow dynamics because their only customer for the time being is.
Mate, I couldn't agree more.
And they haven't lived up to the battery metals thematic. Like, you rewind 3 years ago, they were thinking, right, graphite, cobalt, they're all going to be needed. These companies just haven't lived up to it, and market conditions appear to have changed.
Yeah, I mean, commodity business, you're relying on commodity prices. That's not where the sort of commonalities end either. They've both got funding from US government entities, one from Jeff Wire getting funding from the Department of Defence, and Syrah, in this case, getting funding from the Department of Energy. So
both also got funding from AusSuper.
Ooh.
There you go. So, yeah, it's really that ex-China interest that's super fascinating, and whether it's sort of viable, because they both seem to be higher cost producers, don't they? So Syrah did sort of flag, they spoke about the Inflation Reduction Act, which we've sort of alluded to quite a bit on the show. We find fascinating the impact that that's going to have on markets, and both of the companies sort of imply that they would kind of like to see a bifurcation in these commodity prices, or that a bifurcation in these commodity prices where they get a bit of a premium for being ex-China throughout the whole supply chain would be super, super beneficial to them. So Syrah in the call today, they did reference downstream production facilities potentially being built in, ex-China locations, i.e. sort of Korea, Japan, and that these facilities would then in turn obviously need ex-Chinese feedstocks. So that's where Syrah could, slot themselves in and have a completely, non-Chinese aligned supply chain, which would then be available to the automakers, and the end consumer could receive all the available credits and from purchasing, say, Tesla or whatever it is that is completely non-Chinese aligned. So it's sort of fascinating how that plays out in the future. It's very hard to say at this point.
Yeah.
But obviously both those stocks are in quite a difficult position, aren't they?
Super high risk right now. They're literally campaign mining, right? That's how little demand they're experiencing.
Yeah.
So that that's like, you can take that long-term outlook and think these assets have strategic relevance in the future, and they might be able to sell their product for a higher price than they ever will to China, and there'll be these two different price points, China and then rest of the world or whatever. But it doesn't mean you should buy the shares because, heck, at the moment they're pretty vulnerable to that Chinese demand. You've
got to be in the game in that many years' time to be a winner. And I mean, the whole sort of tone of the call was pretty downbeat today. It wasn't positive at all. And there were times where they, look like they're throwing everything in the kitchen sink out. They're talking at every single aspect of costs. They're talking about, trying to do more solar because diesel has been very high in Mozambique. They're, cutting staff. They're freezing hiring. They're doing everything they can to keep costs down.
Well, maybe they should be focusing on revenue instead of costs, mate, because I saw this tweet from Ian Zhang, and he commented that, meanwhile, they have no sales at email. I reached out to their general email because we had a lead who needed flakes urgently. That was 1,000 tonne spot order plus potential long-term offtake. Yes, they weren't interested. Got zero clue how an interested buyer could reach them at all. So maybe they should stop focusing on costs and pick up the phone.
Yeah. I mean, it goes both ways. We touched on that operating cash flow section, and both looked like they were in dire need of help.
What are we leading back in there with, Trav?
Mate, we were just bloody talking about Syrah, and then we just had a phone call with on Twitter who talks a lot about the graphite market, and
can I sum up what I feel that conversation was? Because I
thought
thought it was going to be recorded, but he said, "Oh no, we'll keep this off air for the moment." So it was like having the best root of your life, but not getting off at the end. That's how I thought it was going up. He says, "Oh no, I don't want it up." I'm like, "Fuck, damn," because it was such a good chat.
It's great.
A lot of takeaways. Hey,
well, I mean,
it's a complex market.
This is a guy who spent a shitload of time, I'm imagining, studying the market. And I think he comes at it with a lens of I'll just work harder than anyone else trying to learn about it. What were your takeaways, JD? Just the insight that we got from him.
On the surface, it almost goes in the too hard bucket, doesn't it? This is a super, super complex market.
Variability.
And one of the key takeaways is, it's not just like gold pricing, you have different, natural, synthetic, then you have different flake size, is it 100 microns or whatever. And there's a whole bunch of different products. And then the other key takeaway is sort of the tuning of the mine into the processing and how it, even if you do it with a smaller scale, a pilot plant versus a bigger plant, you can get a variable outcome, and that's not what a battery maker or whoever wants, You need that consistency with these products, and it makes it sort of very hard to scale up and capture a lot of the supposed value on top of the opaque pricing.
And to even bigger plants, two different bigger plants can give two different products. And he's saying that the time to get the tuning and
the qualification period.
It takes time.
Yeah,
like
2 to 3 years. Yeah. So the key message is that he just doesn't want shareholders to get roasted buying into the wrong stocks, because everyone, well, not everyone, but there's definitely a narrative out there that graphite is the next lithium, but no one really recognizes in that, just one sentence word, how opaque and variable this market is. It sounds like just even the benchmark intelligence and all of the price reporting and market analysts, they are at their core potentially still don't quite understand the dynamics that are happening within China themselves. Even you saw it in Syrah's commentary today, they don't even have good insight into what the stockpiles are at these Chinese buyers as well. So the variability in product is enormous depending on the ore, depending on the processing, dynamics of the downstream bit, the coding, etc. It just sounds like pretty tricky, but there's a fuck ton of carbon, which is what graphite is out there. But yeah, looks like there's a lot of juniors on the ASX, which might be more hype than substance when it comes to actually getting something. There are some out there that of favourably, but at the same time, looks pretty tricky.
A lot of big buyer beware to be put on it.
Yeah, and how the sort of, Eastern companies often look at their inventory levels or the pricing data that they have as that's IP to them. It's very different from how we look at things in the West. And yeah, to your point, Trav, on this sort of notion that it could just be the next lithium, you've got to scratch, beneath the surface and dig into it a bit more. It's not, it's never that easy. So yeah, I think we'll leave it at that, and definitely keen to have him on for a more in-depth chat with the money miners.
God, how much will we have to pay him to just let us release what he told us? Fucking brilliant. Oh.
Allkem, guys. Did you guys catch this one?
I didn't, mate, but I so you've put it in the show notes. I stopped paying attention to them because I just know they're doing that merger with bigger company. I'm like, I've lost interest.
Yeah, I'd sort of felt that way, and I wasn't going to talk about it, but I thought it was pretty interesting. So it's first production at Olaroz Stage 2. Now that's their brine project in the Argentinian part of the Lithium Triangle. So yeah, Stage 2 up and running. They added 15 extra brine wells, 31 evaporation ponds, 3 lime plants, and a bit more infrastructure. We'll chuck up a photo. It looks pretty neat. So this Stage 2 has 25,000 tonnes per annum lithium carbonate nameplate capacity. And now that it's, had that first production, we'll sort of see production volumes and the quality ramp up. So Stage 1 and 2 together have 42,500 tonnes per annum lithium carbonate production. And of that, 9.5 thousand tonnes per annum goes from Argentina to Japan. So Allkem have a JV with TTC, which is Toyota, and that's the Naraha, not sure if I'm saying that right, lithium hydroxide plant in Japan. So that's where they'll turn this, what they call primary grade lithium carbonate, into a battery grade lithium hydroxide. So it's a sort of conversion plant to capture a bit more of the downstream value. And then of course this is just sold onto the battery, and finally the automakers in Japan. All up, it's a pretty positive announcement, and it's kind of interesting to look at the stock. Obviously, you mentioned the M&A activity. We saw lithium prices from about November in 2022, so November last year, come off. They're about half that level now. They're sort of bottomed out in May, and they've ticked up a bit since then. But you look at stocks like Allkem, and you look at stocks like Liontown, and they're both above the peaks that they saw when lithium prices were double what they are today. So obviously it's on the back of M&A activity. These guys obviously tied up in that merger with Livent, and then the bids that had been announced relating to Liontown. But yeah, it's just sort of interesting to see, because a lot of these companies just trade on the back of whatever the commodity price does. But in Liontown's case, there's been 4 upgrades in the cost of building Kathleen Valley. And Allkem's a bit of a different story, but
Liontown's capturing that security of supply sort of premium, which translated into the M&A offers.
It's a big operation. So what's that? So what'd you say? 42,000 tonne of lithium carbonate coming out of it. So that's just as big as Kathleen Valley. So I think Kathleen Valley was 700,000 tonne of spodumene at 5.5%. So that gives you 37,500. So that's a lot of bloody lithium coming out of there. Big operation. I think I've done the math right.
I'll take your word on that math, mate.
We'll run with it.
Yep, sounds good, mate. Hoodaroo, guys.
Hoodaroo. Struth wants to come back in for a hoodaroo.
Hang on.
Cheers for subbing in, Struth. You'll only see you'll have to get a bloody stool, Struth.
Hoodaroo.
Oh, she's shaking the table.
Hoodaroo.
Hoodaroo, Manamanas.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.